Hello, friends. Today we're taking a look at Microsoft Corporation, ticker symbol MSFT. We're going to be looking at the stock performance of the last 5 years, current news, latest earning report, some of the fundamentals, and then try to find a fair value for Microsoft Corporation. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. First of all, I would like to give you a little bit of a disclaimer. Microsoft is one of those companies that I own. I bought it not too long ago. My entry point was $396.72 and is up about 6.6%. And it is it's a half position, so that's about 5% of my stock portfolio. So I just wanted to give you that disclaimer. In the last 5 days, it has gone up about close to 2%. And the last month is down 1.2%. In a year to date, it's almost 12.5%. And last year, 12%. And the last 5 years, 178%. Analysts think that it's a strong buy, and most of the target prices that I've seen in the internet, they're somewhere around 500 to 505, so that makes it close to 19% upside in the next 12 months. PE is at close to 35 times earnings, and they do pay a dividend of $3.32 a year, which is about 0.78% at these prices. They reported on October 30th, and we'll be taking a look about how they did. They beat, not by too much, they beat by 19 cents. They also beat in revenue by about $1 billion in revenue. And they're scheduled to report again on January 23rd. And they're expecting the EPS to be a little lower than what they reported this past report. This is a little bit concerning for some people. The EPS revisions in the last 90 days has been down. So, yes, it can be a little concerning for some people. The way that I actually see it is that maybe this is an opportunity for it to drop. And like I just said, I only have 5% of my portfolio. I would love to get it to a 10%. I try to not have more than between 10 and 15 companies in my portfolio, just to kind of follow them. And this was an initial purchase that I made. So if it drops a little bit, that will give me an opportunity to buy more. I don't know. What do you think? Do you own Microsoft? I know as I'm recording, it just came out that the FTC, 11 minutes ago, New York Times, the FTC launches antitrust investigation into Microsoft. So, breaking news, everybody's reporting this. Just like I mentioned with Google, I think that most of these investigations, antitrust stuff, is going to go away with the new administration, with Donald Trump having won the election. I just think that his administration is going to be a little less involved in these transactions. But that's just my opinion. I don't know what you think about that. By the way, if you like what I'm talking about, so that you know, I normally like to just talk to you guys. I make it a little more conversational. Please subscribe, leave a like and a comment. I am going through all of the stocks that I own so that you guys know what stocks I own, how I'm doing, where they are at. And then also, but after that, I would like to know what stocks do you think I should analyze. I've done some analysis for some of you guys in the past. So please just let me know. With that said, let's jump into the fundamentals. I only have access to 5 years of numbers for Microsoft. So the revenue in the last 5 years has grown about close to 13%. Earnings have grown about 16%, and their profit margin is at 36%, which is pretty good. That's the average in the last 5 years. Free cash flow is it has gone up 10%, a little bit over 10%, which is not bad. I like that it's Google was a little flat. Microsoft seems to be going up. I think that since they went into that whole what's it called, a subscription model, is been helping them. The free cash flow margins average in the last 5 years is 31%, and the free cash flow yield in the last 5 years average is about 2.75, which is pretty good. It's a good yield. When it comes to book value in the last 5 years, have grown 20%, which is amazing. Revenue, I need to stop saying I'm sorry about that. So the last 5 years average return on equity is 40%. The last 5 years return of asset is 14%, and the average of the 5-year return on invested capital is close to 21%. Dividends, they have been paying a dividend, and they have been growing at about 8.5%, and the payout is somewhere close to 28% of the free cash flow. So that's pretty good. I think it's the free cash flow. If you can correct me down there in the comment and let me know the payouts on dividend, are those out of free cash flow? I thought it was free cash flow. But if it's not, please correct, make a comment, and you're welcome to make fun of me. Long-term debt for this is been going down. The debt has been going down in the last 5 years, which is great. And if you took the average of the last 5 years, what they make on free cash flow, and you look at the debt, they could pay it in less than a year. So that's a great. For me, it's a good financial stability for this company. Shares has gone down in average 0.5%, which is not great, but it's better than being growing. So now we're going to be jumping into different types of valuations that I do in order to find a fair value. Just wanted to remind you that I'm not a financial advisor. I'm just a YouTuber. I do this for entertainment purposes, and this is just me showing or telling you how I make decisions, why I'm buying what I'm buying, or whether it's just my opinion. Please don't take any financial decisions based on me or my decisions, and you need to take your own risk. So with that said, with that disclaimer, if we look at the historical multiple valuation, we see that the average on the trailing 12 months fair value would be somewhere close to $404. So yes, that's probably because of Microsoft being a growing company. That's the number that I will probably be looking at, not the average. The average, every time that you see average in all of this, is the last 5 years average of. So, for example, revenue. If we take the average of the last 5 years, it will give you $27.3 dollars. When we look at revenue-based valuation, if they continue to do what they're doing, most of my models, when it has any discount, is discounted at 15%. Most YouTubers, I think they do like 10% or 8% or something like that. I do 15%. So if everything, all the numbers that I show you, all the percentages in the 5 years just stay the same for the next, for the next 5 years, discounted at 15%, a fair value today will be $556, almost 57. Discounted earnings valuation, if we grow all the earnings at 15%, assuming a 40 PE in 5 years, and we discount it back on 15%, the fair value will be $487. Payback time, if we grow the free cash flow at what they have been growing, if you notice here that we're growing close to 11%, if they just stay kind of the same at 11%, and we add all of that cash together, we're looking at a fair value of $275. If we use more of a discounted free cash flow valuation, discounted at 15%, just like we talked about it, and using the medium multiple instead of 40%, 40 times, but more 36 times, the price, the fair value is somewhere around $348. If we were to use the 40, that gives you a $378. So just wanted to let you know there. Owners earnings valuation, I don't feel that this valuation is good for this kind of companies, but this, if you would like to use that, the price will be $439. Putting all of that together, taking the payback time valuation, it gives me a fair value of somewhere around $427. Of course, this is discounted at 15%. If you believe that Microsoft is a good, solid company, and you don't need too much margin of safety, you could go for 10%, which is what I did. He gives you an entry somewhere around $385. I really wanted this company, so I bought it a little bit higher at $396. I was hoping that will come down and I could buy more. So if you think that 15% is more what you would like, that will be $363. Once again, the fair value is $427. With that, you can, take a calculator and figure out what your margin of safety is. So that's kind of what I came up with. I don't know what you think. Please subscribe. Give me a comment below. Start letting me know what kind of companies you would like me to analyze. It should take probably about a week and a half, 2 weeks for me to go through all my stocks, and then after that, I will be taking a look at the ones that you suggest. Hope that you have a great Thanksgiving, and see you in the next video.